Hello and welcome to the program Business Point here on Global Television. I am Samuel Odi, standing in for Mrs. Kikelomo Okere. Okay, we'll be starting from the Nigerian All-Share Index as it slips below 0.09%. That's talking about the trading section of the previous week. Last week, the Nigerian Exchange Limited All-Share Index fell by 0.09% to close the week at 165,370.40 points, while market capitalization rose to 0.18% to 106 trillion 153 trillion naira. Most other index closed higher except the Nigerian the NGX 30, CG and Premium Banking pension growth, as well as the Nigerian Pension Board, which recorded decline of 0.13, also 0.63 and 0.75, as well as 0.63 and also 0.41. A 13% point and also 0.22%. All of these are respectively to the organizations that were mentioned, aforementioned. Also, investors or the Nigerian Stock Exchange traded a total of 3.087 billion shares worth 81.505 billion naira in 222,185 deals, down from 3.748 billion shares valued at 99.865 billion naira, exchanged in 237.179 deals the previous week. The financial service industry dominated trading with 1.49 billion shares valued at 33.923 billion naira in 83,939 deals, contributing around 48.45% of a total equity turnover volume and 41.62% of total turnover volume. The service industry followed with 443.222 million shares worth of 4.93 billion naira in 17,615 deals, while the ICT industry recorded a turnover of over 279.520 million shares valued at 6.443 billion naira in 24,552 deals. Trading in the top three equity by volume, the Versatile Capital Assurance PLC, also Secured Electronic Technology PLC accounted for 382 million shares worth around 1.139 billion naira in 4,895 deals, representing 16.63% of the total market volume and 1.40% of total value. During the week, 44 equities appreciated lower than 58 equities in the previous week. 49 equities depreciated higher than 40 equities, as well as we saw last week, while 55 equities remained unchanged, up from 50 equities previously. Aside that, that's what we were able to see and record in the Nigerian All-Share Index as of the previous trading section, which opened with a higher momentum this week, and we saw that the Nigerian Stock Exchange opened up with a higher momentum, showing that investor confidence is building, and we are looking at how this week's trading section will continue. So we saw the market opening at 165,370.40 points. That is what we are seeing in the market today. That's how the market opened, and then we are expected to see a bit of trajectory and a bit of growth though in this industry. So we're expected to see a change in these numbers before the close of business today, and also we'll see how the trajectory will look like as the week unfolds. So moving away from the Nigerian Stock Exchange, let's quickly look at Naira. As Naira closes at, for the month of January 2026, it closes at 1,391 Naira to a dollar. This is an FX gap narrowed with the parallel market. The Naira ended January 2026 on a stronger footing in the official foreign exchange market, closing at 1,391 Naira to a dollar, up from its opening rate of 1,431 Naira. At the start of the month, that was what we saw, that was the figures we saw. Data from the Central Bank of Nigeria shows that the currency largely traded below 1,425 Naira marked during January, reflecting the stability aimed at improved liquidity conditions. The performance built on gains recorded at the end of 2025, signaling a cautiously optimistic start to 2026 for Nigeria's currency. What data is saying now, for you to know what the data is saying, the Nigerian Naira's month-on-month and year-on-year performance underscores the currency's gradual recovery. The Naira closed trading on December 31st, 2025 at 1,429 Naira to a dollar, representing a 7.4% appreciation from 1,535 Naira to a dollar recorded in the final trading day of 2024. Compared with January 2025, when the Naira ended at 1,475 Naira, to January 2026 outcome marks a notable year-on-year gain. In the parallel market, or you can call it the black market, the Naira also strengthened, closing at 1,453 Naira from an opening rate of 1,474 Naira. The narrowing gap between official and the black market rates indicates easing speculation pressures and improved confidence in foreign exchange markets. So looking at this now, we have to look at more insight of what's happening within the currency, within Nigerian currencies factors, and also we'll also look at the factors that are supporting this growth, and I will say this bullish trend that we are seeing in the Naira's world now. Several factors supported the Naira's performance in the month of January, including external reserve growth and market intervention. Nigeria's foreign exchange reserve rose from $45.56 billion at the start of the month to $46.11 billion by the end of January. Looking at this report now, reports that the external reserve have crossed the 46 billion mark for the first time in about 8 years, highlighting the steady acceleration in reserve levels since 2025. The reserve increase gives the Central Bank of Nigeria greater capacity to meet FX demands and intervene in markets when necessary. While challenges remain such as inflationary pressures and potential external shocks, the data suggests a cautiously positive outlook for Naira in the early part of 2026. So looking at this now, we are seeing a significant trajectory growth, and then other things you need to know as well around the Nigerian Naira is that the month of January FX market performance signaled early stability for Nigeria's currency as a monetary authority continued to intervene strategically. Economic Analysts have also said that the Bureau de Change operator says the Naira could record stronger gains and improve stability in 2026, supported by rising foreign exchange inflows. They also see sustained monetary tightening and ongoing structural reforms in Nigeria's economy as factors that will drive the Nigerian currency this year. Market experts identified that the restoration of confidence in Nigeria's FX market as a major factor underpinning the Nigerians' outlook. They said reforms introduced by the Central Bank of Nigeria, including the unification of exchange rate window, improved transparency in FX allocation, and tighter oversight of market operators, have helped reduce arbitrage opportunities that previously weakened the currency. The Bureau de Change operators also says that this change have narrowed the gap between official and the black market rate, significantly damping speculations around dollar demand. In its 2026 macroeconomic outlook, we saw a projection that Naira could be strengthened to will strengthen to between 1,350 Naira and 1,450 Naira per dollar in 2026. The January outcome indicates that policy intervention and reserve growth are helping to restore confidence in Nigeria's foreign exchange market, laying the groundwork for a potential steadier in 2026. So looking at this now, we all remember last year, President Bola Ahmed Tinubu says that he is looking to stabilize Nigerian Naira around 1,500, and then we saw that in 2024. We also saw him repeating the same thing in 2025, and so far we saw that the Naira was stable at 1,400 to 1,474 Naira. We saw all of that in the previous year, and all of this has been to the fact that we've seen new initiatives by the Central Bank of Nigeria, which is helping to help Nigeria gain more Nigerian Naira get more validation and also be on a bullish trend. So for us to maintain this trajectory now, we need to see more, just like what the Bureau de Change of operators are saying, we need to see more investment within our FX, and also seeing all of that now is also going to strengthen the Nigerian Naira, which is weakened. And if that does happen, the projection for the year 2026 is to see that the Nigerian Naira is stabilized at 1,350 Naira to 1,400 and to 1,400 Naira. So this is what is said to be expected, but still, how can this now trickle down? Because from the financial sector now, we are saying that there's a bit of stability, there's a bit of calmness within the financial sectors. Now, how can all the big question the woman in the market and the cab driver is asking is, how can all of this benefit every common Nigerian? Because those in the Central Bank of Nigeria are seeing in glaring that yes, there's a bit of stability, but those in the market are still complaining that this has not trickled down to them. So this is where we have a major concern, because whatever initiative that has been introduced by President Bola Ahmed Tinubu is for it to trickle down to the common man, to the common woman in the market, and those in the urban areas and rural communities. So we are expecting to see that this initiative and this reflects the current realities of every citizen of Nigeria, because we live in a dollarized economy, and everything that is being traded in Nigeria is being traded on the basis of dollars. So if this foreign direct investment always comes and then the Nigerian Naira gets to be strengthened, then we'll see a trajectory of every Nigerian affirming to the fact that yes, President Bola Ahmed Tinubu held to at least one part of his manifesto, which is around stabilizing the Nigerian the dollar in Nigeria, and also helping the Naira gain strength. So let's see how all of this, if the bullish trend for Naira will continue based on all of the sanctions and also tariffs that is being imposed on mostly African nations by President Donald Trump. So let's move on. Federal government of Nigeria saving bond opens in this month of February 2026, and the bond is offering at 15.356%. The Debt Management Office, acting on behalf of the federal government of Nigeria, has opened subscription for February 2026 assurance of the FGN savings bond, offering investors returns of up to 15% per annum. The offer was disclosed in a circular issued by the Debt Management Office outlining the bond's tenure, interest rate, and subscription timeline. The savings bond is part of the federal government's ongoing strategy to deepen retail participation in domestic debt markets while providing individuals with a low-risk involvement option. The February 2026 offer comes with two maturity options and follows a similar insurance conducted in January, reflecting the government's continued resilience on saving bonds to mobilize to mobiles, domestic funds, I beg your pardon. Then now what the data is saying currently for the month of February. The February 2026 federal government of Nigerian savings bond offers consistent of 2 tenors with competitive interest rate and clear defined subscription terms. A 2-year FGN, that's foreign federal government savings bond due on February the 11th, 2028, is offered at an interest rate of 14.356% per annum, and then a 3-year FGN, that's federal government savings bond due on February the 11th, 2029, carries a higher interest rate of 15% per annum. The offer opens today, February the 2nd, 2026, and will close on February the 6th, 2026, with settlement scheduled for February 11, 2026. Coupon payments will be made quarterly on May the 11th, August the 11th, and November the 11th, as well as February the 11th throughout the life of the bonds. Under the offer terms, units are priced at 1,000 per unit, with a minimum subscription of 5,000 and additional investment in multiples of 1,000. So everybody can invest. All right, I'll get you more insight now. Getting you more insight on this investment, the February offers will reflect a marginal adjustment in yieldings compared to the previous months as well. In the month of January, the Debt Management Office offered FGN savings bond with interest rate of up to 15% per annum. The slight moderation in February rate suggests evolving yielding dynamics in the domestic fixed income market. Despite the adjustment, the February rate remained relatively high, maintaining the bond's attractiveness to retail investors. Interest payments on the bond will be made quarterly, while the principal will be redeemed in full through a bullet payment on the maturity date. The security is backed by the full faith and credit of the federal government of Nigeria and charged upon the country's general assets, providing a high level of safety for investors. The Debt Management Office advised interested investors to contact stockbroking firms appointed as distributors agents, noting that the full list of authorized agents is available on the Debt Management official website. So for those of you asking me, how do I invest in 2026? Simple. Invest with the federal government of Nigeria, and that's all I can say to you. So now looking at it now, for the month of February, this bond has been improved, and then it's starting per unit is going to be sold at 1,000 naira, and then the highest can go for 5,000. And there's also another opportunity for those who are heavy investors that would want to invest in lots and lots of naira currencies. So there's also an opportunity for all of that to happen. But this is just coming to you as news for those who are wondering how to make an investment for themselves. It's better you invest in your own country, and then this investment will help build infrastructural development. And again, your money is definitely going to be secured instead of going to use all of these Ponzi schemes that after a couple of weeks, a couple of months, they get to disappear. So the Debt Management Office is open, and the February Eurobond is also open for those seeking investment. You can get more information on this if you properly do your research well. So moving on now away from currency, but we are still going to talk money. We are talking about Nigerian crude export as it falls to 225,000 barrels per day as Shell shorts Bonga, which is concerning Nigerian crude oil export as set to decline by about 225,000 barrels per day in the month of February following the shutdown of Bonga floating production, storage and offloading vessel for scheduled turnaround maintenance. The development was confirmed by Shell, Nigerian Exploration and Production Company Limited, operators of Bonga field, in a statement issued saying the shutdown affects one of Nigeria's largest deep waters production assets and comes at a time when the country is working to stabilize output and boost foreign exchange earnings from crude oil exports. The company says the maintenance exercise has already commenced on the Bonga vessel and will temporarily halt production until work is completed, with output expected to resume in the month of March. This is concerning, and Nigeria is looking to do more than what it usually does in terms of exports, but now this is going to hamper a whole lot, and this is where some analysts will make mention of the fact that, Nigeria needs to do more in terms of, not shutting down business when one of the outlets that they use for output export is being, renovated or going through any form of maintenance. Still talking oil, petrol price surge sparks calls for crude subsidy. Petroleum products marketers have urged that the only way to shield Nigerians from the shock of a sudden surge in petrol price is for the federal government to sell crude oil to Dangote Petroleum Refinery and other local refineries at subsidized rates. The marketers therefore urged the federal government to sell crude oil to domestic refineries with a subsidy to prevent a sharp increase in petrol price. Specifically, the Independent Petroleum Market Association of Nigeria appealed to President Bola Tinubu to consider stabilizing crude price while also extending Nigerian Naira crude deal to another Naira for crude deal to another modular refineries operating in the country. Recall that the Dangote refinery recently effected a price hike, pushing the pump price of petrol to 839 naira per litre in MRS and other filling stations. A few days later, crude price also surged to $70 per barrel in the global market, fueling speculations that petrol price could raise to 1,000 naira per litre in Nigeria, especially in locations far from refineries or major tanker firms. Speaking on the development, the IPMAN, that is Independent Petroleum Marketers of Nigeria spokesman, Mr. Chinedu Okadike, says a subsidized crude oil supply had become critical to absorbing the shock of any possible price surge. Crude oil price, which serve as main feedstock for Nigerians, change consistently, and also such fluctuations directly affect the price of petrol, diesel, and other fuels. So looking at it now, a quick intervention is needed here, so as we wouldn't wake up, Nigerians wouldn't wake up and then boom, the price of fuel, petrol products in the market would have skyrocketed. Yes, this is an international commodity, and of course, the Nigerian government would do what is in the interest of Nigerians and stepping further to, have some things addressed. Remember when President Bola Ahmed Tinubu came into power, the first decisive action he took, a very bold one and very, very bold, and it takes someone with a whole lot of, confidence that yes, all of these policies I'm bringing on ground is actually going to work, is someone that can take a decision like that by taking away fuel subsidy, and Nigerians felt the brunt of that, and a whole lot of persons are still feeling the brunt of that because they are yet to recover. Businesses crumbled, businesses suffered, and some persons are still trying to get back on their feet. But we will see how all of that pan out. But certainly we trust that the government will do what's in the interest and benefit of the whole citizens of this country. So quickly, as we're getting set to wrap up, let me bring you up to date with what's happening in the digital world as Bitcoin plugs to 10-month low as Trump honeymoon ends. Bitcoin drops to a 10-month low as at today, aimed at a wider market volatility. Bitcoin fell as such as 2.5% to $74,551, just shy of its lowest level since Donald Trump retook the White House a little more than a year ago. That was $74,425 recorded on the month of April. At the time of this publication, it was still below, that's talking about Bitcoin itself. At the time we were filing this report, it was still below $77,000 US. Bitcoin experienced a its fourth consecutive monthly decline of almost 11% in January, which is the longest losing streak since 2018 during the crash out that followed the 2017 boom in initial coin offerings. Its latest slump comes amid broad market unrest, with gold continuing to fall Monday after suffering the biggest plug in more than a decade at the end of the previous week. Other similar cryptocurrencies were also weaker, with Ether down by 4% and Solana falling by 2%. Bitcoin reached a record price above $126,000 last year because of a pro-crypto White House and a growing institutional adaptation, just because a huge sell-off. Just before a huge sell-off. Since then, the initial cryptocurrency has fell by oddly 40%. Nearly $600 million in bullish bets were liquidized in the last 24 hours, according to reports. Broader market decline also on Monday as risk sentiment worsened, while the precious metal market extended a slump that began as at the previous closing market week of last week. So looking at this now, Donald Trump and his Trump coin also is in the market. Based on that fact, we are seeing that other cryptocurrencies are declining. This Bitcoin cryptocurrency came into existence since around 2007, and it has been in the market all this while. So we've seen the trajectory of how Bitcoin has been growing, and experts in the digital currency world have actually, explain that in the coming future, everything is going digital. Everything is going digital. Even your resources and your money is going digital. So we are going to see how all of this trajectory would be and how it's going to affect the life of the common man. But currently now, holders of these coins are advised not to hold so much. But if you have more than enough, you cannot hold. But if you don't, you should trade. So a whole lot is happening in the business world, and we're hoping the time will permit us to bring you more. But this is how much time will permit us to take. But as the business week opens today, it's best for you to analyze the market properly and then know if you would go with the bullish trend or you will stay with the bearish trend. But like we always say, Global Television means business, and I am Samuel Odi, sitting in for Kike Lamo-Okere. I'll see you, or Kike Lamo-Okere will see you again as you all discuss more business. Bye for now.